Welcome back, Alpha Hunters. Hope you had a wonderful week. It was a wonderful week. Not much went on in the market this week, except for, Thursday and Friday, the market decided to sell down pretty much all day, both days. So we'll get into that, but the market did just close for a week of April the 22nd. So let's go over some things. There was some major breakdowns, especially today on Friday. So let's talk about what I'm watching, what kind of pain we're probably all feeling, and potentially how we want to set up and what we need to look for going forward. Okay, so real quick, gonna just talk about what the market did this week. Monday, we opened down, traded up a little bit. We didn't really do much. Tuesday, we did just trade higher. I'm gonna zoom in for you here a little bit. Tuesday, we did trade higher, and then Wednesday, opened higher, traded a little bit lower. And then Thursday, we opened higher and then traded lower. Pretty much it was a whole about 2.5% move day. Yeah, it was about 2.3% between the open to the close, because we did open higher by about 1% when we traded down. We actually closed down for roughly about 1.5% that day. And then today we just opened lower and pretty much sold down the whole day, ended the day down about 2.5%. So what kind of went on this week was Netflix reported and they got kerbolished. That was Tuesday after hours. Not really going to go into that. They just have problems. Too many competition in their space. And then Wednesday after the market was Tesla. Tesla came out and they killed it. They still have really good demand and those kinds of things. The other thing that was a key takeaway from earnings this week was a lot of the travel and other areas like that did very well. The airlines earnings were very well. So the consumer is still strong. It's just there's two shifts kind of going on in the marketplace, and the first shift I'm going to mention right now is the consumer shift. The consumer is shifting where they are spending money and getting out of the house. Okay, they're starting to travel more. They're going out and doing outdoor fun things. Okay, well, that's what we'll say. Outdoor fun things. So if you can think of something outdoors and fun, that's most likely what the consumer is going to be doing, and anything that revolves around that. So travel and hotel, leisure, that kind of stuff, working really good as they continue to have great demand and great earnings. Anything that has been working for the pandemic world, the at-home stuff, Peloton, Netflix, not really working right now. And Netflix is a whole nother world of issues, not just their demand. The second thing that's kind of going on right now in the marketplace, the second change, I guess we can say, that's kind of going on right now, or rotation, has to do not so much with the consumer as it is like fundamental market and investment, money flow, and all those kinds of things. And really, you got to understand that the world that we have been living in is changing, and in the aspect of shrinking interest rate environment, and we can't make interest rates go any lower, right? And they've gotten historically low over the past 2 years. Really, ever since the pandemic crashed, they got really low. And now we're just seeing interest rates rise. So that's one aspect of this that you are seeing. The other one is the dollar index, which is putting pressure on a lot of things related to the dollar, which stocks is one of them. The other one is going to be commodities. So we'll look at some of this, but we're not going to go into all aspects of it. It's not really the point. It'd just be beating the drum. We don't need to beat the drum. We just get an idea of really what we're looking at, okay? So the two things that I've really started watching over this week, especially yesterday, as the market continued to sell down. If we do look, let's go look at an intraday chart. So this is a 15-minute intraday chart. And if we see this open, and it just sold down pretty consistently all through today, and this is where we opened today, right here in the middle of the screen here, and we just continued to sell down the whole day. And then at the close today, we did have a pretty good sell down the last 15 minutes. So what is putting a lot of pressure on the stocks is going to be rates in the dollar, right? So let's go ahead and try to figure out what would be a good instrument to look at. And what I do look at when I talk about rates is the TNX, and I actually have it here on my list. The TNX, it's right up here under the VIX. It is the T Tango November X-ray, TNX. And if we look at a daily chart of the TNX, well, we can see that since the beginning of the year, which is right here, it has been on a very good uptrend. Okay, so, and we have seen really since the beginning of March that it has dramatically increased. And does anybody remember what happened right before March? Oh yeah, that's right. Russia invaded Ukraine right here in this point in time. So if I flip over to the SPY real quick, I can get the exact date. It was the 24th of March. So the 24th of March was this day right here. So we saw interest rates kind of open down, then jump up, and then had 2 days, 3 days down, 2 days down, and then ever since then, as the Russia and Ukraine crisis has lingered on and more inflation news has come out that's been really high inflation, we've seen interest rates just continue to rise. So with that being said, this is something that is very much what you should watch. I'm not saying you got to watch the TNX. So if you do have another bond or interest rate type instrument you choose to watch, and it probably looks somewhat similar to this. Another one that's kind of similar to this, but this is the 10-year Treasury. Now, if we want to look at the 30-year Treasury, that's the TYX. I don't really watch this one that much. It's still in the same kind of uptrend, but it's a longer term one, so it doesn't move as dramatic as a shorter term one would. So that's why you see a little bit chop here at the end of March, beginning of April. But the TNX is one I would definitely watch. And if we do look at what has been going on a monthly, so obviously you can spot the pandemic crash, right? Back here in the beginning of 2020, we just had 3 months of solid interest rates down. And then we saw a great bullish activity pick up in the second half of 2020 and carry into 2021. And then it's really done nothing until the beginning of this year. And now it really has picked up. Okay, but the thing I'm going to throw at you is, well, if interest rates continue up on the space, what is it going to do to the stock market? It'll probably just crash the stock market. But what I want you to understand is we are coming into a pretty long-term kind of support or resistance area. So as we get closer to that, it's going to be very hard for the interest rates to keep up with this pace to the upside. Okay. The pace to the upside is what is kind of leading me to think that we are going to have a pause in rates soon. And I don't know how much of a pullback we'll get. I doubt we pull back much. We might just go sideways for a few months and consolidate before we push higher again. But we'll just have to wait and see. And the key takeaway from this is when rates finally do stop with this pace to the upside, what does the stock market do? Okay, and that's a key takeaway. What does the stock market do when rates stop going up at the pace that they're going up, right? So look back at the daily, like this pace is pretty steep for interest rates. And then the other one is that you can watch is the DXY. Now this is the US dollar currency index. This just basically tells you roughly how strong the dollar is. It's not a currency compared to like a forex comparing it to other currencies. It's roughly just an index giving you an idea of how strong the dollar is against a bunch of different things in the marketplace, commodities, currencies, that kind of thing. So as we look at this, we see that really ever since the beginning of the year, roughly ever since mid-January, the US dollar index has been climbing. So the US dollar has been getting stronger. And this is what is causing a lot of turmoil in the marketplace, especially with commodities. If anybody follows commodities, probably not doing all that well. Not really talking about oil because it has its own set of issues and supply and demand factors currently in the marketplace. But I'm talking like gold and maybe some other things like that. So I'm going to switch over to gold real quick. And gold had a really good period run up until the beginning of March, and then it really hasn't done much. But over the past week, it really got hammered down pretty well. And a lot of it had to do with the strength of the dollar and the rising interest rates. And the reason why there's a lot of rising interest rates and the strength in the dollar is because even though we complain in the US here about inflation, there's a lot of other areas around the world talking about inflation being worse than we have it here for many factors, but they're looking for safe havens, and one of the biggest safe haven in the world is the US dollar and the US government bonds. So as people continue to flock to safe haven type assets, we'll continue to see strength in the dollar and US bonds. And as long as we do continue to see strength there, we'll probably see weakness in the market and probably some commodities. Maybe not all commodities, but probably could be a good majority of them at least. So what does all this kind of mean? So I just wanted to call out those two things really, the TNX, the 10-year Treasury note, and the DXY. And then we can talk now what all this means and what I'm looking for. So what I am looking for is a pullback or a pause period. Like we got a pause period in the DXY here in really beginning of March to mid-March, really throughout March, honestly. And what that period did, really, if you want to look at SPY, well, we were kind of bullish on the market, right? So if we were bullish on the market while the DXY didn't increase, okay, so then that's something we can look for now. If the DXY starts to pull back or just starts to have a rest period, what does the market do? And this is going to be something that can tell us what we can expect to position later on, okay? The TNX really hasn't had a rest period since the beginning of March. It had like a 2-day pullback here towards the end of March, but other than that, I mean, it's just kind of been on a beast. You know, interest rates have been really killing it. They've been trying to catch up to what they think the Fed is going to be doing with raising rates. So there's a lot of expectation about really a rapid increase in interest rates from the Fed. So we'll just have to see how that plays out. Now, when we start to get TNX and DXY, that's what I'll be watching. So that's just what I'm going to call them. But if you're talking about like interest rates or dollar strength, if we start to get some pullbacks in those areas or just some sideways movements, what is the market doing? If this market starts to jump, okay, starts to really rally, and we're not really getting a pullback on the TNX or the DXY, and maybe they're just kind of going sideways, or maybe the DXY is pulling back, but the TNX is going sideways, not really pulling back then, okay, then we can see that the market's kind of willing to sustain maybe that level of interest rates, and the market maybe will be okay. If the TNX pulls back or goes sideways, and the market goes sideways, this will be very telling if the market goes sideways, because if the market goes sideways and the TNX is no longer increasing, that is going to be a primer for if the TNX starts to increase again or bond rates increase again, that I could see very much the market getting crushed to the bottom side. So if we don't, so currently this TNX is right around 2.9 area, okay? And if it just kind of hangs around this 2.9 to maybe 2.6, we'll call it, somewhere in that area, maybe here for the next month or two, and the market rallies, then I'm going to say, okay, you're probably good. We're probably just going to continue bullish. The market, the TNX will probably just sustain at this level, maybe push a little bit higher later into the summer or something like that. But if the market doesn't do anything, okay, so if the TNX just goes sideways, and I'll flip back over to the SPY here. So we'll say in that TNX environment, the TNX just kind of goes sideways, or maybe it pulls back. But if the market starts to just kind of shop around in here like this, I would be very cautious. I would not be bullish. I would be ready to flip positions. I would be ready to cut bait on a lot of things. Because if the market does not show strength, and the TNX and the DXY, really the TNX, that's the one you really should be watching as far as like the market's concerned. Not so much the DXY. The DXY is going to pertain a little bit more to commodities, but the TNX, if that is going sideways or it's pulling back and the market is not being bullish, I think that'll be the clear sign to go ahead and get the heck out. I really do, because once we break over that 3 to 3.5% area on the TNX, I could definitely see some major issues coming into the marketplace. So that is what I'm watching, and then what I will be anticipating. So if we do this scenario, if that scenario does play out and the TNX just kind of goes sideways, maybe pulls back a little bit over the next couple of months, and we do just go sideways on the SPY and the SP 500, the Qs, I will very much be looking to probably pick up short positions, as we could very easily push down and very quickly, as there will be a flood of people trying to get out and rush out the door of the market and go to safe havens. Well, this is what I'm going to say. I don't know if we get our next buying opportunity at 400. I think we will see some buying there, and it'll probably be pretty strong, because I do remember a report back, oh man, sometime in February before we really sold off down here, but it was back probably in this area. Basically the report came out that there was an analysis done that said there was a lot of money and potential buyers sitting at the 400 point level. Okay, so that's roughly 4,000 on the S&P 500. That's 400 on the SPY. It would be very curious to see if that is where we just go breakdown, we snap, and we hit 400, and then we start rising again. I don't know, or if that would be the bottom when we start and then we climb back to all-time highs. I'm not sure about that. If we break that down, I do think we are clearly in the bearish trend market, and it's going to be kind of just hold on, protect yourself, and try not to be as bullish. Look for the bearish case scenarios or bearish trade setups. But this is what I'm watching. I am watching the TNX and the DXY. But as far as like the economy goes, and this is one thing that does lead very bullish for me, is the consumer and companies are continuing to have great earnings. So that is on the bullish side, that's very good. It's just the area that that is killing the market right now is interest rates and the strength in the dollar. Okay, the market and some commodities. So definitely be looking out on the interest rate side, as that will probably be an area of strength. Hopefully we do get some pullback, at least some sideways action on interest rates, and they stop going up. If we can just get a sideways movement here on the TNX, and tell you what, I'll kind of draw out a little bit of what I'm looking for. If we can just get maybe some sideways movement, kind of come in here, and then it can just kind of continue up, maybe at a much more reasonable pace. If we can get back bullish and interest rates climb, but at a much more reasonable pace than what they are doing, then okay, I think we'll be all right as far as being bullish on the market. But man, with the pace on which the interest rates are climbing right now is not bullish on the marketplace. But we can definitely plan other scenarios for what we can look for in the future for how to play either bullish or bearish. But that is what I am watching: the TNX, the DXY, and when they actually do rest, what does the market do? And I will then set up accordingly for either scenario. Okay, but it's very much going to depend on what the market does when I laid out the two scenarios for the TNX and the DXY. Okay. But if you have any questions, or feel free, like I missed something, let me know down in the comments. I'll definitely try to get back to you. So that's pretty much going to do it for this one. But hopefully you guys know a little bit more of what's going on in the market. I know not everybody has a chance to look at stuff like this every day, but that is what I'm looking for, what I'm watching, what I'm monitoring. And best of luck to you out there. Alrighty, take care, Alpha Hunters.